This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I'm also the trader behind the Trade Spotlight advisory service. My Trade Spotlight is three segments, all under one advisory. I'm covering futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Last week's video, I touched on the Canadian dollar, which we ended up shorting last week, and we're profitable at the moment with a stop loss in place. So we have a risk of 200, but I'm looking to move that stop loss above today's session high, which will then lock in some profit on that trade. And I touched on the Bitcoin contract. There wasn't an official recommendation, but if you did take that trade, you're profitable as well. I have two markets I want to look at for today. The first being the June 22 E-mini S&P contract. And what I'm looking for is for this contract to sell off a bit more so we can set up a buying opportunity, whether that's with the futures on potentially a day trade because of the margin requirements, or just looking at a call or a call spread in this market. You can see I have drawn off an inverted head and shoulders. Picture someone standing on their head. You have the head of the formation is this ellipse here. That is the new 12-month low at 40.94 and a quarter. That was made on the 24th of February, and we weren't that low, well, going back to May of last year. So not technically a 12-month contract low, but at least for this year, that is absolutely the session low. And then you have the left shoulder is this point here on the left-hand side. That low is 42.04 3/4 from the 24th of January. And you can see I drew an ellipse here at the bottom of that trend line. That's where I'm looking for the market to head back into that range, 4,200, 4,250. I don't know if we get down there. You look at the studies here. The stochastics, which is a momentum study, is already near the oversold level. And this GBE turning point indicator is just grinding along that lower baseline. My MACD, which is a trend indicator, is showing that this market is turning over to the downside. So let's see how low we can go. We just broke through a 200-day moving average that came in at 44.7220, and just below where we're trading now, we have a 50-day moving average at 44.16 3/4. Let's see if that holds up as a support level, or if we can break down through anywhere in this range. We're looking for the market to check up to create an opportunity to get long to the upside. Disregard the horizontal lines here. That was from a previous option trade that I had on the books that has since expired. Okay, so that is the June 22 E-mini S&P contract. Looking for a little bit more pullback before we get long this market. And the second market that I believe is setting up for this week is in cattle. This is the June 22 live cattle contract, and what I have drawn off is a 1, 2, 3 bottom formation. So this ellipse here is the 12-month contract low. That is 130.97.5 from March 4th. Then we had this rally and really some sideways action. So it's not a strong formation, to be honest. You see the market checked up near this 50-day and 89-day moving averages, the 50-day at 137.64.6, and the 89-day moving average at 137.52.7. We traded as high as 138.52.5 on the 29th of March. Proceeded to sell off, creating this third point that was last week's low of 132.47.5 on April 6th. Since we've bounced slightly, and you can see I have a blue ellipse drawn there, I'd be looking for a break of that high and that 200-day moving average at 135.34.2 for a trade to the upside. Right now my MACD indicator is relatively neutral. That makes sense. We've been trading sideways for the better part of March and the beginning of April. Though my stochastic indicator is hooking up, showing a build in upside momentum, and that GBE turning point indicator is hooking up a bit stronger towards the medium the median of that range. So I believe this market can set up for this week a break of these recent highs. We'll be looking to get long, place a stop loss below these recent lows. That lowest low at 133.10 from the 5th of April. You can even go below this number 3 point or below the 12-month contract low if you want to take on some more risk, but take on a conservative type of trade. My upside target is up at this number 2 point here, maybe just in front of it. Again, that high was 138.52.5 from March 29th. So keep an eye out for the June 22 live cattle trade coming out this week. This is what the trade spotlight looks like. It's an email service. I'll do a write-up similar to what I discussed in the charts. You'll have the precise entry and exit orders, so you know risk-reward parameters for each trade, and you're welcome to tweak them to fit your own trading style. And, of course, the chart you can click to expand to take a look and see what I see. If you're not following the Trade Spotlight, I encourage you to do so. It's free to everyone. You can go to the Daniels Trading webpage, click on Advisories. At the top bar, under Technical Analysis, you'll find Trade Spotlight. You can read recent posts and click the orange button. Here is all my contact information if you have any questions about the markets I covered today, the markets that I covered last week, or just trading in general if you want to open an account. Thank you for taking the time to watch and listen, and happy trading.